Is the global economy on the brink of collapse?
Experts like Danielle DiMartino Booth, Robert Kiyosaki, George Gammon, and Professor Steve Hanke are here to break it down for you.
In this video, we've transformed their comprehensive analysis into time-saving, actionable insights.
So, get ready to gain clarity on inflation, market shifts, and your investment strategies. Quick tip: this information is for educational purposes only and is not financial advice.
In today's discussion, we're reviewing the insights from Danielle DiMartino Booth, a renowned economic analyst and the CEO of QI Research.
Danielle's expertise lies in analyzing macroeconomic trends and their impact on financial markets.
Danielle discusses how political events, particularly around the recent election, shape market expectations.
She argues that these influences can lead to volatility and shifts in market sentiment.
What does Danielle predict about the employment rates in the coming months?
Danielle anticipates a rise in unemployment, which could signal an economic slowdown.
Danielle has speculated that inflation could lead to a significant market correction.
This correction might be heightened by policy adjustments from the Federal Reserve.
What is Danielle's outlook on market volatility?
She warns of continued volatility as the market reacts to fiscal and economic changes.
Danielle emphasizes the importance of monitoring labor market trends for clues on economic health.
Shifts in employment patterns can indicate potential market movements.
What final advice does Danielle offer investors?
She cautions that high concentration in equities can pose risks, suggesting a more diversified approach.
Today, we're exploring critical insights from the latest analysis by George Gammon, known for his expertise in global economic trends and market dynamics.
George provides a fascinating look at the recent challenges faced by Deutsche Bank and its implications for the broader market.
George Gammon points to Deutsche Bank's staggering profit drop of 92% as a warning sign for the global monetary system.
He suggests that these challenges reflect deeper issues within the interconnected nature of global banking.
How does George Gammon describe the interconnectedness of financial institutions?
George explains that just as a crash in a pack of bicycles can lead to a chain reaction, a prediction, but an argument to consider.
What bold prediction does George Gammon make about the Dow?
He suggests that the Dow could theoretically reach 100,000, stressing that this is not a prediction, but an argument to consider.
How does George assess the reliance on foreign capital?
He notes that the U.S. stock market could be buoyed by foreign purchases as investors seek safe havens in an unstable global economy.
What does George predict for the year 2025?
He indicates that 2025 may pose serious challenges for markets, suggesting it could be a year of reckoning.
What should investors take away from George Gammon's insights?
George recommends that investors keep a close eye on evolving market dynamics and adapt strategies accordingly.
Today, we're exploring the unique housing trends and community dynamics in North Idaho with insights from Seth Hors, a former law enforcement officer who is now a thriving real estate broker.
Seth has leveraged his background in public safety to build a successful real estate team focused on serving a population of like-minded individuals.
Seth's brokerage prioritizes a community-centric approach, bringing together veterans and former public safety professionals.
This collaborative culture has been key to their rapid growth and success in the local market.
Seth Hors emphasizes that many newcomers are leaving California, Oregon, and Washington due to oppressive policies and seeking a sense of safety and community.
This influx of residents has significantly impacted the North Idaho housing market, driving demand higher.
According to Seth, North Idaho offers a unique combination of beautiful landscapes, low crime rates, and a strong conservative community that's appealing to many.
He describes how the American dream is still very much alive here, making it a desirable place to raise a family.
What does Seth say about the current home prices in North Idaho?
Seth notes that the average home value is around $551,000, making it challenging for local families to afford homes.
Seth shares that many retirees, especially those in law enforcement, are moving to Idaho and driving housing prices up.
This has created a competitive market where locals struggle to compete with their purchasing power.
How is the inventory looking in North Idaho, according to Seth?
Seth mentions that it's tough to find homes under $400,000, and many homes sell quickly, often going above the list price.
What are Seth's thoughts on the future growth of North Idaho?
Seth predicts strong growth for the next several years, fueled by ongoing migration from other states looking for a conservative, family-friendly environment.
Does Seth foresee a housing crash in the near future?
He believes that won't happen soon due to persistent buying pressure from out-of-state residents.
Seth advises potential buyers to stay informed about North Idaho's market trends and be ready to act quickly.
Understanding competition and inventory dynamics is crucial for making informed purchasing decisions.
Seth emphasizes the importance of community engagement in maintaining North Idaho's values.
Involvement in local governance can help residents influence future developments.
Today, we're diving into economic insights from Robert Kiyosaki, the author of the best-selling personal finance book, Rich Dad, Poor Dad.
Robert's perspective has influenced millions regarding wealth creation and asset management.
Kiyosaki shares bold predictions about the future of gold, silver, and Bitcoin.
His views reflect deep insights into market dynamics and the impact of monetary policy.
Robert Kiyosaki warns that inflation and the growing debt crisis can significantly impact the economy.
He emphasizes that excessive money printing leads to wealth disparity and economic instability.
What does Kiyosaki predict for the S&P 500?
Robert believes that a major correction is imminent, impacting retirees heavily.
Robert highlights that government policies are exacerbating the wealth gap between the rich and the poor.
He stresses that increased homelessness and economic challenges arise from these disparities.
What does Robert think about investing in precious metals?
He strongly advocates for gold and silver as protective assets against market volatility.
What is Kiyosaki's take on Bitcoin?
Robert promotes Bitcoin as a trustworthy asset, particularly as traditional currencies face inflation.
What does Kiyosaki predict for gold prices?
Robert anticipates gold could reach $15,000 if current trends continue.
What about silver? Does Kiyosaki see potential in that as well?
Yes, he believes silver could hit $70 due to low supply and high demand.
What should investors do, according to Kiyosaki?
He urges a focus on investing in hard assets like gold, silver, and Bitcoin.
How important is it for everyday people to stay informed?
Kiyosaki emphasizes that understanding economic trends can help individuals make informed financial decisions.
In today's discussion, we have Professor Steve Hanke, a renowned economist who teaches at Johns Hopkins University.
Steve is known for his expert analysis on monetary policy and inflation.
The Bank of Canada recently cut interest rates by 25 basis points due to rising uncertainties.
Professor Hanke discusses how these cuts may affect the Canadian economy, especially with potential U.S. tariffs looming.
Steve emphasizes that the Federal Reserve is overly focused on day-to-day economic indicators.
He points out that the Fed fails to consider money supply growth and credit conditions.
Hanke notes that the growth of the money supply is currently at 3.9%, below the needed 6% for stability.
This shortfall could lead to slower economic growth heading into 2025.
What does Professor Hanke expect for the economy in 2025?
He predicts economic slowdowns due to tight monetary policy and a reduced money supply.
What does Professor Hanke foresee for Canada, given the rate cuts?
He suggests that Canada may face recession risks due to aggressive monetary policy amidst trade conflicts.
Steve believes that U.S. monetary policy may lead to stock market corrections.
He estimates corrections could range from 15 to 30% if certain indicators don't improve.
Professor Hanke emphasizes the importance of tracking the money supply.
He advises that understanding monetary trends can offer insights into economic health.
Steve suggests that consumers and investors alike should pay attention to macroeconomic indicators.
These insights are vital for making informed financial decisions in uncertain times.
Wow, what a thought-provoking discussion we just had.
Absolutely. Each expert brought a unique lens to the reality of our financial systems.
I found it particularly interesting how they all agree that inflation needs serious attention.
And investing in real assets came up frequently. Seems like a good hedge against the unknown, right?
Definitely. But then you have Professor Hanke's stark warning about hyperinflation. That's a whole different ballgame.
True. Meanwhile, others like Seth Hores and George Gammon are focused on how digital currencies might reshape everything.
It's amazing how each perspective complements or challenges one another. It definitely leaves us a lot to ponder.
If you enjoyed these insights, make sure to like this video, subscribe, and share it with your friends.
Your support makes it possible for us to keep bringing you these valuable analyses.
Stay tuned for our next episode where we'll dissect more financial issues. Trust me, you won't want to miss it.